Amar Singh Deod, Head Equities and Currencies Research at Aditya Birla Money as well joins in. Amar, hi. First, let's start off with your view on gold and what trade would you recommend?
We have been witnessing a sideways trading in gold for the last few weeks, in particular with international gold prices trading in the range of say $1,525 on the downside and $1,580-$1,585 up to $1,600 on the upside. We see the gold prices to trade in the short term in a sideways manner, with domestic rupee depreciation helping gold prices. But right now the rupee is also witnessing some sort of appreciation after the severe depreciation that rupee had witnessed over the last few weeks in particular. What we are witnessing is also some sort of risk aversion in the markets, with the dollar now somewhat slowing down the pace at which it was strengthening against other major currencies. So gold, from a short-term perspective, yes, one could look at buying, or from an intraday perspective, I would say one can look at buying gold at around 28,850 with a stop loss below 28,750, targeting 29,020 levels. And today being Memorial Day, US markets would be closed, so there could be less of trading action in the evening session.
What about base metals? Would you look to buy them as well?
Coming to the base metals pack, base metals, we are again witnessing a sideways trading range in base metals, and because lack of fresh triggers which would be supportive for the prices. So what we are seeing is that the Greece concern still remains on the forefront amongst the investor community. Apart from that, sustaining at high levels for the base metal prices is also a big challenge, while at the same time prices have also been witnessing some short covering in the markets. So from a short term or from an intraday trading perspective, copper could be bought at around 425 levels with a stop loss below 422, targeting 429, 430 levels.
And what about your views on crude?
Talking about crude oil prices witnessed a significant decline over the past few weeks, with prices correcting by more than 10%, and prices finding some support now, because what we are witnessing right now is that prices are finding support because of short covering and also some sort of technical support coming at the current levels. The Iran issue still remains, because that would be somewhat, I would say the markets are more or less, they have digested the current issue, and until and unless something fresh crops up, we don't see crude prices rallying significantly from here. So it could be a sideways trading in crude oil prices. From an intraday perspective, yes, we could see some bounce back in crude oil prices on the back of short covering. So from an intraday perspective, crude could be a buy at 5,070-75 levels with a stop loss below 5,034, targeting 5,100-5,120 levels.